Welcome back, Market Mastery. It is a bloodbath out there. Thank God we're here to settle you up a little bit, get you nice and tucked in, and get you some plays that are going to make you some money. We're going to talk about 2025 potentially being the year of the bear market, the new regime not setting up with a good look just to start. So we're going to talk about a couple of the big names that I know all of you have been following, everything from Palantir to NVIDIA to the spies and the Qs, to make sure that you're set up to start this year off on the right foot, bear or bull. We're going to set you up with your SPY options trades. So you're going to make money up and down. We're going to set you up with a couple tickers at the top of our watch list. We might touch a little bit on upcoming earnings, and then we'll finish with a quick gamer smash or pass where you guys submit the tickers you want to talk about, and we give it a quick once over to see if it's worth a look. So I'm glad you guys are here. I'm joined by my handsome co-host here, Stock Savvy Shy. So are you technically Persian?
Yeah, I am. I am
was
full.
Aladdin Persian.
I am full-blooded Persian from
And
the
then
Persian
follow up:
Empire.
have you ever gone as Aladdin for Halloween, or would that be cultural appropriation?
No, funny.
You're Persian, so
My team carried me on a carpet during a prep rally in high school for basketball because I was like I was the varsity captain, so like they carried me out there and I had to do dance. But no, we played into it. I am so Americanized that I do not get offended at all.
hey, Aladdin was a G, dude. I love Aladdin. Okay, had the spice, dude. He definitely did. So let's get started on the spy. I mean, dude, bloodbath. This is pretty brutal. So let's go to the daily here just to show you guys a quick recap of what's happened. Let's get all these drawings off the screen so you can see clean and clear. It has just been, I hate to throw the word capitulation out there, but it's kind of hard not to if we see another leg down, because then we're talking 10 points plus, which, let me ask you that, Shai, do you consider that to be your marker of true capitulation?
So I don't think fear has really hit the market yet. That's the scary thing. I think this has been a controlled pullback. You can make the argument that VIX at a 22, 23 is elevated, sure, but like for capitulation, I'm referencing August 2024. I'm referencing like fear is at a COVID high almost, or it's like at least past 40. Right now, it's fearful, but it's not capitulated type of fear. That's where is that going to start kicking in? I think it might start kicking in. I'm pulling up the chart right here. We're finally going to be testing the 200-day moving average on the daily chart. It's been what ever since the rally began in October 2023, 16 months ago. We haven't tested this key level once, not once. All year, I've been saying, I think we're going to test the 200-day moving average sometime in like first half of this year. I think we're going to occur. Once big tech earnings clearly gave us signs that they're going to treat this whole 2025 as an investment year for them. Invest in the CapEx, AI-related investments, so they don't have any more compute constraint anymore. But they're not going to see that revenue reacceleration on the top line to match that CapEx spend. That disconnect is an investment year where shareholders maybe don't want to hold this position for too long. Like it's just going to be dead money. So once I saw, I don't think big tech's going to catch a bid. I do think the breadth is going to widen out, and that's exactly what we saw. However, we are seeing signs of exhaustion from the buyer side. And by exhaustion, what do I mean by that? Trump tried to save the market over the weekend. Like that, everything that Trump does is a chess move. Like he wanted to do something crypto related to cause a risk on environment to buck this trend we've been on the past couple of weeks of just selling into strength. Like every bounce we've had sold into strength. Like we've just been selling, fading. Once NVIDIA start being up 4% after, not 4%, but like they're a green pre-market after their earnings, immediately sold off at the open. That was telling to me. Once they broke through the 200-day moving average on the daily chart with no resistance, no attempt to get it back above it, another tell. And now when the 21-week EMA, which was the medium-term indicator since 2023, got sliced through, I was like, I think we're going to be a magnet towards 200-day moving average on the daily chart. That 200-day moving average for QQQ is at 492. We're 1% away from that level. If we hit that level and we crack through it, I think crack through it, not just like slightly, like with velocity, like the way we've been cracking through things. That's when fear is going to kick in, and we have a big gap to fill. Once we clear that, that's the issue. Like there's a big gap with no volume shelf, no volume profile. Like it's been kind of up to the right for a while with like lowish volume, that there is an air pocket now. So if we slice through 492 on QQQ, let me pull it up to
you want me to get the cues on here, you said?
Yeah, let's do the cues, because right now it's very tech driven what's happening.
Yeah, we lost the trend. So we outlined that on the Friday premium stream in the Discord. We're talking about this trend line has been pretty go-to dating back to the lows off December 22, which you got two years of price data. I'm going to count on this. And you've watched as we've just slowly, and anytime we had any sort of anomaly, like an outsized, sell off. So you mentioned August 24, right? Buyers came in force. Look at that volume right there. Statistically significant. So any sort of outsized moves, the buyers easily gobbled it back up. We saw it a little bit Friday. The question is, why didn't we see those same buyers come in today? That's the problem.
I mean, what's the catalyst to buy? Think about it. Like, first off, the tariff or like high stakes poker game that we're playing right now.
It's crypto.
As of today, it might be crypto, but as of today, like this is a bite.
I think this world, I'm noticing a parallel with the Trump world. I'm noticing, I got the experience because I've done it with a coin. I am noticing the same market dynamics that I saw in launching a coin in this market. There's only so much hype without material result that you can rely on before people are just like, look, dude, I believe in this and I'm in this, but that's all I got. You only have a certain amount of dry powder. And you saw the same thing with AMC and these other ones that had the strongest like emotional movement you've ever seen in the market. Yet it got destroyed because when you're fighting an army that has tanks, sticks and stones ain't going to cut it. And that is retail. That is the story of David and Goliath, retail versus institutional markets. You have to get in where you fit in. You're not going to overwhelm or overpower. And I think right now, institutions are finding a great opportunity because think about it. BlackRock has an 8,000 year window. Like that's what they're looking at is how do we live forever and usurp it all? It's the kingdom of Rome all over again. Like they're not thinking in terms of the next year or 6 months or even 5 years. They're thinking over the next 50 years, how do I pulverize the world and make more? It's the truth. And so they don't give a shit. Hey, you know what, guys? Let's drive this down to 300. Those idiots will sell the whole way down and we'll buy it up. Then guess what? We're going to run it right back up to 600 again. Then we're going to sell on them. Like that's the kind of, and they also have tons of technology that they can leverage to do exactly this. So I think this is not looking good.
I think
it's not looking good.
Listen, I bought hedges once we broke the 21-week EMA. I sold those hedges today. I want to see what QQQ does at this level. Like, I know that it's breaking that trend. For me, I'm just looking at the 200-day moving average on the daily chart. That's a key level where
everyone's following it.
Everyone, because that's when, first off, algos follow that. Like, it's a key technical level where that's why I think capitulation might occur, because once we break that with volume, I think the algos start doing it with even more volume, and then we just see what's happening, and people are going to take their chips off the table because things are moving too quickly. We're entering a stage 4 breakdown chart. Stage 4 is when all the money is lost that you made in stage 2. Nobody wants to be participating in stage 4. 2022 was stage 4. That was all. Like, if you bought the dips all year in 2022, you were just like, you got busted unless you had a lot of you making a lot of cash every month and you just put in the market. Like, you got busted. So I think a lot of people
it was a net neutral return on a lot of my money because it dumped so much and I didn't replenish because I was just like, you know what, at this point, scared. I'm not doing it. And as a result, like I made a lot of money the last 2 years, but I could have made a lot of money.
Oh, if you sell all your positions after they break the 200-day moving average and just wait until they recover it, the returns are kind of nuts. Like, if you're a trader, that's the thing, and not factoring the tax losses, the taxes you have to pay, etc. But I just think right now, for me, I'm I'm sorry to say I'm happy. I think that I was a little worried if we were going to get a 20 something percent. If we were getting a 20% return on the market again this year, 3 straight years of doing that, that's bubble. I'm sorry, but it just is. Next year would have been disgusting. And right here, this is a 10% correction, not even maybe on QQQ. We're
So
at
you're
a
saying
5%.
you're looking at overall health of the market. Like what you're saying here is that this is a net positive.
Yeah, absolutely. Especially if
Great.
you're a long-term investor, and if you had I got a 12% cash position because like I just wasn't adding in the market for months. Like it was just that kind of environment. Ever since November or even October, like it's just been running. No, ever since the election, market just ran, and I just didn't add for 4 months. And every month, you guys know, I put 2% into my portfolio every month, and that cash position was just building and building and building. Now, after we got through earnings season, like I can see some high conviction names delivered, and they're pulling back due to something that's macro driven. When that occurs, that's when I love to capitalize. For example, I have a big position in Snowflake. I'm not going to add, but they delivered, absolutely delivered. Tesla, people were waiting. Like bought some more Tesla for the first time in over a year. Like I I'm taking advantage of some high. Like I added like 5 or 6 names today. I sold some names as well because like I'm getting defensive. My trades, my lower conviction names, like I'm selling those because look like we're about to break this key level, and I want to be somewhat defensive, but I only allocate that cash toward my higher conviction names. That's kind of what the strategy you need to have if you're a long term investor, and you kind of need to, I don't know, don't go all out right now. Like even with all my ads, guess what? I have an 8% cash position still. Still, I'm infusing maybe less than 1% on days like today when I just added. Like I still have plenty of cash. Be patient. This is a marathon, it's not a sprint. I know we've been accustomed to V-shaped recoveries. What have you been saying all year? 2025 is not going to be the same year as 2023 and 2024. It's going to be choppy. I think my base case is 5 to 7% green and SPY and QQQs. It's going to be minimal. And I think it's going to be a stock picking market where you need to have exposure in specific pockets of it. But I think big tech is going to be a dud. And guess what? The Mag 7 has been significantly underperforming the market. Like there's strategies you have to implement this year that you haven't really had to the past couple of years. And it's tricky because like NVIDIA, I still think NVIDIA is going to be a $10 trillion company. But clearly, they are the poster child of a stage 3 top entering a stage 4 bottom. Like they're the poster child of it. Slice through the 200-day moving average, try to bounce, couldn't break above it. That was now the support turned to a resistance, newer low. And now they're below the deep seek low, which was just like a couple weeks ago. So like this is a bad environment that I feel like is going to get worse and significantly worse if we violate the 200-day moving average. That's how it is, guys.
I agree. And so let me ask you this. So we got the link right here. I would definitely take a picture of it, scan it, or go to the link in Shai's bio. I think you should break down one of those main stocks that most people are probably not brave enough to say, but that you're selling. I would love to see that. And I read your stuff every week. Put it in the email.
Okay.
Because I'm curious enough that I'm going to make sure I read it because I want to know. So if you guys want to know what stock that you might own and everyone else is probably still buying that he's getting rid of because he's always seen it usually 6 to 12 months in advance, scan this code or go to the link in his bio. That's at Stock Savvy Shai on Twitter. It's right in his name. And make sure you get access to that so that you're not holding on to a loser, a dud, when everyone else is dumping it. Don't do it. It's a trap.
Okay. I'll send my write-up on why I sold this position.
I love
next
that.
One. That's a good call.
Love that. So it's right there on the screen. Alternatively, just go to the link in his bio on Twitter. You can get it. It's the best newsletter you're ever going to get for $4 a month. It's like less than 10 cents a day, if that, 12 cents a day. No, I guess technically 13 cents a day. And if you have more than $1,000 in your portfolio, you'd be a dummy to not risk $4 to make 4%. So take a look at that. Again, we've outperformed the general markets year over year, both independently and together. All our focus is putting together the best information and highlighting the best names, and then the ones we cover, making sure that you fully understand the price action so you don't get caught offside. So that brings us to Tesla here. A few key things to look at. So as Shai said, the high conviction element is essential for these picks that we're talking about here. It's the way him and I both trade and invest in the long term. High conviction, high growth rate. with a very scalable and adaptable future, particularly one that's focused on leveraging automation. So if you want to be ahead of the head of the train, I mean, this is really the only way to do it. I remember you were talking about a while back, like that this is the new kind of version of the industrial revolution, and I agree. And I feel like a lot of the picks that we discuss, they are the key drivers of that revolution. So basically, let me put it to you this way, guys. The world didn't want faster horses, or sorry, the world didn't want a car. The world wanted faster horses. Ford delivered the car, right? They didn't see it coming. It created an entirely new economy because there's a new technology. Same thing is occurring with AI right now. And these companies are going to take advantage of the initial iterations of those products, but companies will be born out of this that are based solely around those products. If we're able to find basically what the car did back then, imagine if you knew a couple years in advance. That's what we're telling you right now with these names. If you watch this stream every week, I promise you will be at the forefront of what the next big deal is in AI, in automation, in highly scalable, hyperscaling growth industries and segments. Tesla being one of them. I just saw an amazing video today of FSD being used on a small dirt road in China. It was like the most ridiculous thing I've ever seen, that this car was handling these turns at 40 miles an hour on like a 9-foot wide dirt road. So clearly they are doing a good job there. So if you're looking at Tesla, I didn't like the break below 303. Notice that's the one level that we had highlighted here. I don't want to see anything lower than 270. And it looks like we tried to catch a bottom there, but didn't solidify. So I would be on high alert if you're short-term trading this name, if you are not convicted and willing to hold for 5 years, or you bought, the top and you're struggling with that entry. Again, we called this out to all of our subscribers first right here at about 115, and then Shy and I did it live at 140 back in April of 2024. So you've had the opportunity to get in. So again, our position was up 400%, give or take 300%. I'm not a buyer here personally. If we do get gap filled to 217, worst case scenario 189, I will be a buyer there. But I want to watch this 270 level. It's a critical level. So again, if this is short term for you, I would really mind that level and really pay attention to how it's engaging with that level. It's going to take a lot. And I would say, I don't know about Shy's opinion on this, but the more Elon has integrated himself into the U.S. government effectively, you could argue the stronger the case for Tesla becomes, but on the same token, I think it also offers up more liability because it creates political polarization, whereas you didn't have nearly as much of that. Have you noticed that at all, Shy? Like with Tesla, like there didn't used to be the political polarization that you see now.
I live it. I want to.
And it's that brand risk that could affect Tesla's stock price.
I mean, I think it's a net neutral. Like I think
okay,
for the negative on the liberal side is a positive for the Republican side. I think it's just like that's why it nets out. But also, like, I don't think it's a great thing. I don't love seeing that. To be honest, like I think he's making a big bet, the biggest bet I think in his career, ever done in his career. So like that's why when I add he's essentially like it's unprecedented that the power, the access to power.
Office. Kids are running around going fuck shit, like it's madness.
But there's also somewhat of like you saw what Trump tried to do over the weekend, and it had minimal oomph to it. It sold. So now I'm a little worried that the weight of what Trump's going to say is getting drained out a bit because everyone's all about tariffs. Regardless, during these kind of pullbacks, I always err on not adding to my speculative positions, because again, when we have these pullbacks, I like to go on these like defensible moats that are somewhat high floor safety that won't go lower as much as everyone else. Like Tesla, I'm a big Tesla bull, top 4 position for me. It's speculative because I'm buying a company that isn't the company I'm envisioning in a couple of years. That's what speculative means. Like I'm putting money in a company that doesn't exist yet. Like AI and software, the autonomy version of Tesla does not exist yet right now. It has great milestones, it has great technology, but the company itself does not exist yet. It's transitioning. And because of that transition, there's going to be a certain level of risk of can it deliver. Elon's track record speaks for itself. I'm putting so much faith on Elon because he has succeeded. Like he's hitting 100%.
Yeah,
He is
you can't deny it, and just the fact that he's just basically embedded himself as the chair of the board of the U.S. government, it's unbelievable. So I mean, I also think that it's worth kind of evaluating what type of both tax incentives and federal funding initiatives will he now be able to capture, given his kind of source of power, that I think are like kind of like free money. Like look at it as a for-profit business being granted. You know what I mean? It's ridiculous. And also the access to everything from lobbying to, I mean, that's the thing to me is like you get that seat of control, you can kind of push through any initiative you want. And when everybody wants to be your friend, he is the single most powerful person on this planet right now. Period. Other than maybe Larry Fink, Mr. Dink.
well. So my fear is like he's always accurate with what he predicts. It's just the time window. Nobody really knows. He's really bad time. So like if the market is underwriting a second half of of this year is going to be FSD revenue, we're going to start seeing we're able to price in actual fundamentals hitting the balance sheet in the next like 12 to 18 months. It's got to start the test pilot or the going live on unsupervised in Austin needs to be successful for at least a couple months before we can factor that in. He's saying second half of this year. If there's any delays to that, you're going to continue to see deterioration on the EV business, like because he's not giving an F about the EV business anymore. He's like, I'm sacrificing this so I can fulfill this. If this is getting pushed aside a little, like even a delay, a couple months, this will continue to show weakness and the FUD's going to rise. So the reason I added the Tesla, again, 200-day moving average, it's my favorite technical level for any charts. That was at 280. We bounced perfectly off that level last week.
So low risk, high reward.
Exactly. And I was like, I would love it under $200. Again, like I'll continue building my position because guess what? My portfolio has gone substantially bigger since 2 years ago when I started building it. So now if I don't add to it, it becomes a 4 or 5% position when I want it to be part of my bonsai portfolio of top 5 positions. So I have to build on it. And that's kind of my mentality. I added 15%. It's not even that drastic. It's just I added 15% to 280.
There you go. So transitioning then into another name I know you guys are all wondering about, and we've broke this down for you. I mean, we talked about that gap fill to 84. That was written on the wall. I feel like you definitely should have seen that coming because we very directly told you about it. But very similar to what you're seeing with NVIDIA, it could not break through and it couldn't flip this over as the new pivot. 109 was not meant to be the floor. I do believe that between 60 and 80, we're going to see probably some pretty solid continuation and consolidation. I think that would be very healthy. Given the stock that runs up 1,300% in a short period of time, you don't particularly want to see those ridiculous outside moves completely giving themselves back. You want to see them give some back. I would say less than 40%. I look at any move, a good way that you can use Fibonacci is take the bottom before the move, hit the top, and then follow this 0.61 right here. If it gives back more than half the move, that's a dangerous thing. If it gives back 30 to 40% of the move, I think that's healthier than giving back 10, because that's showing you that the market has basically saying, hey, I validate you, I appreciate you, and I believe you. And we're gonna find a middle ground that's a little bit better so they can set up the next round of catalysts. So I think with Palantir, just to keep it brief on this one, because I want to talk some software names while we're here, Snowflake in particular. I think it's just a very tight watch for everyone that's watching. If you didn't buy with us at $7-8, I would look at $71 as a great opportunity to really just build a floor for the stock. And I think that you're going to find this thing trading probably at or near there for a while, as low as 65. But I think 72 should be a nice kind of marker to start DCAing in if you don't have a position, if that's what you're interested in doing. I know that that's the only place in which I am looking to add. However, I'm not going to add equity. I would only add options because I already have a sizable position in this. I don't want it to be any bigger. So I would just keep that level on watch if you're following this stock. I think that's a pretty comprehensive level that should hold. And you can see that price data is there to validate it significantly. So this December 20 day where we saw significant volume flow in, and then moving forward to lead up into the February boom when this gapped up. You saw some pretty strong buying right in that range between 72 and 82. So I think this one's set up for success, and I hope nobody bought the top above 100. Told you it's set. Shouldn't buy it at 100. So to give a quick shout out, if you guys are not in there and you want those, again, this is a different link, but a link no less. If you want to get in there in the Discord, you want access to these trades before they happen, like Palantir at 7, Netflix at 200, Robinhood at 7 before it ran to 60, NVDA at 12 before it ran to 140, you name it. They've all been posted there. We break them down, craft the options trades, and teach you the strategy. You can scan this link right here. You can go to the Penny Boys Twitter and click the link there. Get in there as soon as you can. Friday, we're going to be breaking down some passive income options as soon as we get on the stream at 2:30. So let's make the transition to software here. Snowflake holding up surprisingly well relative to the rest of the names in the market. I feel like this is a vote of confidence from the market that maybe this one drew down a bit too much and things got a little out of hand. But yeah, I mean, because we picked up from 160 pretty quickly. I don't love the volume here, but at this stage, I think that this is looking a hell of a lot better than the SPY or the Qs do.
I mean, it is. That's the thing. Like, as surprising as it sounds, because like I should be getting destroyed a bit with my portfolio being all risk on. I am still 3% up 3% this year, and I think it's because certain names are holding up really well in software space that are showing that Gen AI is causing an immediate beneficiary for these businesses. Like Snowflake specifically, you're seeing like, wow, their Gen AI side of their business is taking off, like absolutely taking off. And I think the market's kind of calling BS on their guide for the year, like for the Q1 guide. Like right now the market's pricing them growing at 24% for the full year, this upcoming year.
Uh-huh.
Every metric that they're called out is showing it's going to be 27 to 28%. They're going to be growing there. So that's a disconnect of like, oh, that's very interesting. I think another call out for Snowflake, let me pull it up real quick, is their relation to the partnership with OpenAI. They announced a partnership with OpenAI where it directly integrates OpenAI's models into their Cortex AI suite. Cortex is that's their AI inflection point. And I think this signals even more like they're a cloud agnostic player. They're also an LLM agnostic player. It does like this arms race you're seeing in LLMs across the board from these Anthropic, Gemini, OpenAI, ChatGPT, like LLMs, DeepSeek, like LLMs are going to be such a commodity. It's not going to be, they're not going to be that different from one another. So while they can fight it out, spend billions of dollars trying to differentiate themselves against one another, a Snowflake, a Palantir, they're LLM agnostic. So they're going to benefit from whatever race they're participating in. I do think OpenAI is still one of the first mover advantages of that LLM race. And there is somewhat of an angle that they solve AGI, who knows what, but either way, there's people who love Sam Altman, think he's the first mover in the space and he'll continue to innovate. But that partnership with Snowflake is another validation of they're going to be thriving in this next stage of AI. They just will be. So
and they're piped in with the single largest data set source. I mean, I can't imagine anyone has more data than OpenAI has access to right now.
Yeah, I mean that and
which is the key driver of any success of any LLM is like what data sets do you have and how quality is it?
And guess what company owns 40%, has 40% of the Fortune 2000 data into the ecosystem? Snowflake. Like I'm telling you, like once Sridhar like solved like what their go-to-market AI products will be, aka Cortex, they're like, okay, now we figure it out. We can leverage the data that we have in our ecosystem to upcharge consumption model. Like you're seeing, I think the figure was customers who are spending over $1 million expanded 27% year over year. Existing customers. That shows that all the customers they had in their ecosystem already who are spending over $1 million, so decent clients, were spending 27% more money than they were last year. That's what I'm talking about. When data is going to explode, it really hasn't exploded yet. AI agents are just getting started. Like they're in experimental phase right now. Once they get scalable, it's going to be an explosion of data that's going to cause. And for a Snowflake, you pull a query today, you're going to have to pull another query tomorrow, and that query tomorrow is going to be that data is going to add on to the existing query right now. It's never going to replace it. So every day is just going to incrementally add more and more data. So in an agentic AI environment we're going to have next couple of years, data is going to freaking explode, absolutely explode. They're going to be printing cash. So I think that that's part A. Part B is data liquidity. I think a lot of people aren't talking about how important it's going to be to share data between customers. Like I think having the reason Salesforce did such a good job in the cloud era was because they created a marketplace. Like we mentioned that last week. Like that was the one thing Steve Jobs told Mark Benioff, like create a marketplace for customer relations. Snowflake's doing that for data already. It exists. So like this data marketplace, 40% of the world 2000 data, global 2000 data is already in this using this marketplace. They're creating a marketplace to be able to share data shared between the customers. And you can only do that if you're in the Snowflake ecosystem. That's data liquidity. The more data you have,
a whole
the more
new business. It's like a whole new vertical on top of
Yeah.
it. Like they'll be able to process it and then also resell it back to all the third-party guys that are going to use it and build products on it.
And that's a network effect. That's what's a network effect's called. And that went up 33% year over year. That specific data sharing feature. So that's growing more than their biggest clients spending more. So that shows you kind of glimpses of what the future is going to be like. And I think the biggest win was the RPO, remaining pricing performance obligations. This is what customers are going to eventually spend in their ecosystem. That went up 33% here. So are you telling me that Snowflake, with all these metrics I'm calling out, they're going over 27%, 33%? They're supposed to guide a 24% growth in full year? BS. And management recalled that there's going to be reacceleration in the second half of the year. It didn't say specifically, but read between the lines. I think they're set up for a surprising guide, like beats for this year. And I think the argument that AI was going to cannibalize them as a business is getting shuttered now. Back-to-back quarters are showing clear benefits from Gen AI right now. That's gaining more and more momentum through partnerships like OpenAI, through ChatGPT, and then you're also seeing the reacceleration on a lot of these important metrics. So the only issue I have is like I think they're going to be fair price for them is $250. I think they really need to solve their SBC issue. Their stock-based compensation. I know it's the name of the game. You have to pay for talents. And that's just how it is. But 40% of your revenue for SBC is just a really, really tough pill to swallow. I know that diluting 24, 25%. I think Palantir got down to the low 20s pretty quickly. I think it's a different business model. I know it's like way different.
What you're referencing is the same concept. This is more equity structure and capitalization.
Yeah, I will say another thing is
nobody wants that risk.
Their sales and marketing expense declined quarter to quarter. That shows to me is they have the products now ready, and it's the word of mouth is working. The past couple quarters are like spending a ton of expense towards that. The product speaks for itself, and now you're going to see that expense kind of getting lower and lower because they don't need to advertise for it as much because it's happening. People know of it now, and they're spending on it. That was like, oh, that's an interesting tell I got from that, like when I read into their earnings report. But either way, like excluding SBC, I think they're going through a re-rating in the stock, and that re-rating is going to go from trading at 45 times free cash flow to, I don't know, 75 to 80 times. That's what MongoDB is trading at. Cloudflare is trading at 100 times EBITDA. Palantir is trading 120 times free cash flow. Like, I think there is room for a 2x from here on Snowflake due to that re-rating. And that's why I think you're seeing
$2.99, baby. It's already there.
Yeah,
you guys will be watching this stream in X amount of time, and you're going to see these little candles, these little candelabras. You're going to see them climbing up, and eventually they're going to hit right here, and you're going to say, damn, I should have just listened back then. So don't be that guy. or girl or whatever.
I
Trust the
think it's
data. Listen, trust the
I
data.
I
That's
do think
it.
on days like today, though, I do think it's really telling of what showed some strength. I really do, because today was across the board selling. I think Snowflake being down 1.5%, that's telling. I think CrowdStrike being down less than 1% today on them reporting their earnings tomorrow, telling. Palantir, they were down less than 2% today. That's telling, especially with their valuation being that high. I think there's so much appetite on stage 2 of AI that you're seeing signs of these premier companies that people are going to scoop up if it continues to deteriorate. Valuation is still kind of putting aside. So I don't know. Either way, I'm not adding a Snowflake. I don't need to. It's my top position, but
You're already juiced up.
yeah.
Juiced up, ready to go. Beautiful. Couldn't agree more. So again, we've talked about these ranges, 202 to 299, incredibly attractive. If you don't want to take the risk now and be early, I would watch that breakout over 202. I think that's going to be an incredible opportunity for this to find new range and seek liquidity. Clearly, it exists right here. There's an inefficiency that you can exploit and take advantage of, I think, from both a fundamental perspective as well as a technical perspective. So keep that in mind. If you need help with reading price action or knowing when to buy, Stocks Buddy is the best. Called this one at 113, absolute bottom. Already up almost 92% from that call out, or I guess about 80% from that call out. So if you need tools, use the tools, trust the fundamentals. We're breaking it down for you and helping you understand and take advantage of the next wave. Again, I really like that you called it the next, was it the fourth revolution or whatever the hell you call it. I like that because that makes sense. It is. It's an advent of a new technology. It's electricity all over again. Out of this AI landscape, a lot of things will evolve and emerge, and wealth will transition, and new opportunity will be created. And honestly, it's sad, but it's going to widen the gap. So again, we've talked about this quite a few times, guys. If you are not capitalizing now and you're not early enough, you will get left behind, whether it's missing out in the market gains from the key players, really running, or losing your job to automation. I mean, there's a number of ways this can come out of the wash. And I don't think any of them are good for non-specified low skill labor, or, which I don't think most people would really anticipate, but not low skill, but it is like entry levels online skill. So I think a lot of your admin work, bye-bye. I think a lot of your like base copywriting and social media content stuff, bye-bye. I just don't see those lasting. I mean, we're already using tools that are allowing us to do a lot of these things a lot more quickly. I mean, you and I did it the other day, and we were breaking down, kind of like, how do you build out a successful campaign? Instead, we've gotten our models to the point where they're producing content I'm very satisfied with. That is not like GPT. Like, it's very much like we made one in Shai's voice. It's excellent. It's excellent. It calls out a lot of the same things. It does a lot. So like, you guys got to think about that. If you're not the creator, and I mean that in a broad sense, that can have a really interesting insight, opinion, a differing angle, like a good raw source material, it's going to be tough to really do much, I think, in 25 years. I think it's going to be in a fundamentally different world we live in. But for everyone that has like a Steve Jobs essence, a guy like Steve Jobs could have probably built a company like Apple with far fewer people or effort or energy, because you just have to have the raw source material, the insight to refine it, and then really the drive to push it forward. And I think a lot of these companies are paving the way for that to be a lot more accessible to the average everyday consumer. You just want to capitalize the growth until they hit that scale of market and are widely distributed and known everywhere. So you heard it here. You've got your breakdown. I want you guys to start going ahead and putting some tickers in the chat. What stocks do you want to look at? Do you want us to take a quick peek at? Cover for you? Look at the chart, maybe a quick fundamental jump. Perfect timing. You just asked. That's what I'm telling you right now. Start getting those stocks ready. Start putting them in the chat. While you are doing that, I wanted to draw your attention and get Mr. Software's opinion here on GitLab. So earnings today were not great, but they weren't terrible. What was your opinion on that? I saw you make some posts about it.
Yeah. So
what happened that you didn't want to see, or what did they not produce that you did want to see?
I saw no reacceleration on their guide. I would like to see that, but to be honest, like, that has been the common thing. this cycle where a lot of guidance has been conservative because, like, again, why would you stick your neck out if you're C-suite on an aggressive guide when you don't even know what's going to happen on tariffs? So, like, Trump's playing this high stakes politics poker game. Like, people are going to err on the side of caution. It's just too much uncertainty right now. So I didn't love them just meeting it essentially in line. What I did like to see from them is they came in at 29% year-over-year growth this cycle. Great to see that. They're gap profitable, 18% operating margin. So, like, they don't qualify for the Rule 40 yet, but they're showing signs of reacceleration backwards looking. And just their guide was just like so meh. And I think it's just like the first earnings report for the new CEO. So typically those are very cautious. I think once AI agents take off, I do think source code management is going to be one of the immediate beneficiaries of that movement, and that's GitLab.
I'm very curious to see like what kind of data they can curate as well. I think that they have a few opportunities, and to make this quick, basically, because I want to give them the smash or pass. People have been missing it. Basically, over $95, this thing's golden, but I think there's a huge opportunity to capture that upside. I would love to see $49. I'm a buyer at $49, speculative buyer, but a buyer no less. And I'm willing to take a 15-20% risk for 100% upside. I think the trade's there.
I to be honest, like, I don't think this is going to be a standalone company by 2027. I think it's going to get acquired next 2 years by Google. I just think unless we see something drastically improving, reacceleration. Like, I don't know. I give the new CEO 2 years, but I just saw nothing inspiring in that print. I still need to listen to the conference call. I still need to do all like the extra layers, but like 10,000 foot view, I just saw a okay quarter. It was
cool.
Just okay.
Nice. You saw this. Good. Cool. All right. First up, ASTS. AST Space Mobile. This is a shy special if I've ever seen it. What you got cooking here for this bad boy?
It's an execution-based story for AST Space Mobile. Like, I'm an owner of that in my small cap portfolio, only because, like, if they execute what they're saying they're going to do, wow, just wow. Because we're talking in next 3 years, they're going to be earning net income wise, earning $3 billion in cash a year, $3 billion by 2028. They're trading at $5 billion market cap right now. So they're bridging the connectivity from terrestrial to the world. Like, this is the American Tower of Space is what I call them. They have to execute though. So there's a certain level of risk associated to this, and that's why you have to be fully aware, especially when you get in at $25. It's a different risk profile than it was a couple years ago, but also not really as much because they have a lot of partnerships.
Last year in May when this was trading at $2.
But they didn't have any of the partnerships though that they have now. That's the thing. Like, they're getting validated with a lot of the partnerships. Like, I can see the flow coming through. They just have to deliver and execute, and then they're going to be a substantially higher company. Like, if they make $3 billion of like actual earning, like net income, and by 2028, this is going to be trading at least $20 billion market cap, and that's a 4x from here. So
I love it. I actually like it here at 25. I think you get a low risk opportunity if it holds this channel. I mean, if it doesn't, just go back to the source of the run, and I would like this to see it 21, even worst case scenario 19. And if it builds a base there, I mean, that's a great opportunity to build a $20 cost basis, and then, you know, really just in firm stop loss below 1750, and that way you don't lose any of this channel filled down. So if they don't execute, you're talking about risking $2 a share for over $20 a share upside. That's a good risk reward. I like it. So I would say this one's getting a smash if it's hanging out above 25. Oh, we didn't do the SPY options. I'm a dick. That's my fault. Let me do that really quick, because it is very cut and dry right now. So last week we absolutely nailed it. We gave you the put entry, as you can see right here, below 597. Those printed. $17 move, multi 100% runner. We have been giving you those week in, week out. even the bull trade paid off. Oh wait, that's the daily. Even the bull trade paid off because it hit our first pivot point 584, ripped to 594. So you made 100% both ways following these trades. So let me break it down for you really quick because this is going to be very similar. We are below 584 right now. Okay, that is a critical mass point. We are bearish at this moment. We need to maintain that philosophy because that's the truth. We are going to open, and if we hit and reject 584 and a quarter, I will be then targeting our next level. To play it safe, I'll probably target 580, which was the local low. I will basically at 584, I will look 2 to 3 weeks out in expiration, maybe a little bit shorter in this case. Let me pull up the SPY chain for you. But again, these levels will apply for at least the next week or two. The point is, this is an easy way to make a ton of money in a short period of time trading options through these ranges. And I'm breaking it down for you. We are soon going to be releasing these. Well, we already have it up. Join the Discord with the link at the bottom, wap.com/PV alerts. We're going to be sending these out in a dedicated email to make it more convenient to you going forward. And over time, as we build it into that email product, we will scale it off of the stream. But for the sake of getting it done now, again, 200% plus trades last week. If you followed these trades from Monday, I'm going to give them to you again today. We're looking at the 580 put for March 17th. I like right now. So the price opens up. We hit resistance 584 and a half, give or take. I'm going to hold this all the way to 580. It will at which point be in the money. I will scale out some. If it continues to break down, you're going to get to 575, another $5 move. This is going to be a multi 100% runner. Bang, bang, done. That is our bearish scenario, and I think our most likely. Now let's talk bullish scenario. If we rebound and recapture 584 and a half, I will be looking at the same expiration March 17, except in this example, in bullish scenario, I like 590. I could live with 590. I would be targeting the 590 calls. So if the price action is as follows, we trade down a little bit, we break up, confirmation, 15-minute candle above this level. So right now, we just look at that. On the 15-minute, we just climbed above it. If we stay above this level, 584 and a half, I will buy that confirmation and I will trade that on the way up. And that will be, again, also a 100% mover. No matter which way we go, I think we're going a direction, and I think it's going to make us great money. So I think we've broken down two very effective, very accurate, 100% plus trades for you. Again, join the Discord to get the link to the SPY Playmaker product, where these are broken down even more in depth and delivered right to your inbox. I will turn it back over for smash or passes. I want to make sure I got you those. Those clap last week. I just realized that the one contract moved like 200-some%. So we're giving you that good. Your choice, PDD or INCY?
I don't even know what the other second one was. So PDD.
Let's do Pinduo. Still trading. I think we bought this maybe $80. Went to 133, huge move, 120. They own TikTok, correct? Or what do they own? Yeah.
Temu,
that's the one. Temu's gross, dude. What the hell is this doing? Yeah, I don't see. I mean, as the economy continues to get destroyed, I guess people will shop on Temu, but I personally just don't support it. I think you got some trend strength here that's got a hold. We'll see. Stocks Buddy says Stocks Buddy on the monthly is your golden. That's your golden nugget. As you can see, Stocks Buddy on the monthly called this at 45. It went to 164. So you missed a 4x by not having access to it. Right now, Stocks Buddy's bearish on the monthly, showing us that unless this breaks over 135, the trend is going to stay the same. I tend to agree. Keep it moving. Let's go Hood. That's a banger. It's been crushing for us. We got this one down here at like $8, went up to 60, whatever. My next target personally would be to a test of 84, but I think that we got to maintain trend here and then see a strong continuation volume push over 60. What are your thoughts on them expanding their business? I mean, crypto doing well and fees is good for them. I think they're doing a great job incentivizing users to move more cash onto the platform. As they get into the checking account features, they become a bank. So if they can become basically the intermediary between you and your money, I think they're setting themselves up to capture a significant portion of fee growth. Thoughts?
No, I mean, if you're gonna have a fintech, if you're gonna have a fintech exposure, like this is the name to do
This is the
so.
one.
I just think I know Coinbase is a pure bet on the crypto cycle, and like Robinhood still has somewhat of effect by that though. So once the bear market occurs in the crypto space, like it's going to be pretty it's going to be pretty ugly. But I think Robinhood has done everything it needs to the past 2 years to exert themselves into permanence by having less cyclical risk associated to it with the Roth IRA, 401k, etc. That they're embedding themselves in as the future go-to financial ecosystem for millennials, Gen Zs, etc. And I think they're gonna be just fine. It's just right now, like at $45, I like this ad. If you use the anchored average VWAP from November 2024, it's great. But I'm worried about crypto. Today was a really worried. I thought they were gonna catch a bid and maybe test 100K, and I did not expect a reversal like that. It's a little worrisome.
It is. And to just call it out real quick, John mentioned, I think that's international brokers, as we just said. The fintech / brokerage exposure I have is Robinhood. I'm not going to have any others. I just don't see the benefit. Let's go MEG. What is this? Montrose Environmental Group. What the hell is this? What the hell is this?
I don't even know.
Yeah, unfortunately, I'm going to have to pass on that one because I have no idea. Oh, Honest Brands. Is that Jessica Alba?
It was. I don't think she's CEO anymore.
Oh, good for her. Super hot. So anyway, these setups, I love these setups. I wish I would have caught this one back in 2023. I love these like IPO just bloodbaths where you get this nice little curly Q. This one is actually setting up in a place where like I don't know enough about the fundamentals of the business to make that call, but it's setting up to in a place where this is something I could definitely see myself swing trading for a double up. You got fair value to 1040.
That's a wild first 2 years of being public. That is every month is a red candle. That's crazy.
Yeah. And then most have just been green. So turn stocks buddy off. You can see they had intermittent green, but not much. I'd give this a smash at $4.50. I actually like it there with a hard cutoff. So quick stop. You'd have to measure that against other comps as far as market cap's concerned, but I'll just leave it there. A-Lab, this also feels like shy.
I love. Oh, Pascal. Yeah, I mean Pascal's one of my boys. I love.
Pascal.
I love Astera Labs. It's in this environment, but this is what I like to add. I'm sorry, but like I think networking infrastructure, IT the infrastructure is going to be for networking is going to be even more important once again in the future. It's going to be vital actually, and it doesn't get they don't. Astera Labs solves a major bottleneck in there. I think right now it's just been a very expensive stock. I think a lot of people are just worried about the unit deceleration quarter to quarter. But this, I think I mentioned it over my subscribers over the weekend when I was breaking down each of my charts. This is the most worrisome stock. This and Tempest AI of all my portfolio holdings is like it's breaking down. And I think there is a massive gap to be filled on this name. Let me pull it up real quick.
Yeah, there's not enough data here either. Like this chart isn't filled out yet. Like it's still in discover mode.
Yeah, it looks like it's scary, but like $40 to $45, it looks like it can hit, and that's like the crazy thing. And like,
if it defends 60, you're fine. But if it doesn't defend 60, I would actually set my sights. Yeah, 43, 40, 41, or new discovery of lows. I would say most stocks like this, that's why I love the IPO cycle. I'm not saying it's justified. I'm just saying, here's what happens, buddy. This is what happens, man. It's unfortunate with names that come out the gate hot with the IPO. I mean, I would definitely take a close look at unlocks and see who's getting stock when and where, because that's going to be a key driver for this.
I did that. Those days are behind it.
Okay.
This is just, I think nobody wants stage one of AI right now. Like, I think semiconductors are all in. I posted a chart over the weekend. I tracked 20 names. Not one is in a bullish trend. Not one. There's 3 in a mixed trend. And of those 3 names, Broadcom and Marvell are in the mixed trend. That's the same kind of space that Stare Labs is in, but Stare Labs is a younger, new hot
Yeah,
thing.
right.
But it's not a place to be semiconductors. It's ugly out there. Ugly.
Yeah, I'm gonna say that's a pass for me because it's brutal. We'll do two more. Shopify, my darling, that made me some damn good money. So again, that link at the bottom gets you access to the Discord. We were buying this at $30.50. Easy quad win here, 400% return, trading at 106. I closed pretty good chunk of this last week. I just finally said, you know what, Austin, don't be a greedy pig. You can buy this back at 70. That's what
Listen, tariffs aren't good for Shopify. They're really not good for Shopify. So like I think to be honest, they're holding well. I think I would assume they would get hit even more. They are showing somewhat of strength. So like I think I don't know, like be right on paper, like what's holding up surprisingly well after running up, and those names are going to be the new leaders of the next leg. And so Shopify feels like yeah.
Dude, something I document, I'll say this and we'll hit RXRX and be done. I keep a little note of every website I use as a consumer. I look at whether or not it's Shopify. Take a guess at what that, just on anecdote, it's not anecdotal data, but it's not like every single, but it's most of them. Take a guess, Shy, at what percentage of the sites that I visit to consume items, right, to buy things. Take a guess at what percentage of those have been Shopify over the last 6 months.
85%.
82. You're damn close.
Damn.
82. Think about that. 82%.
That's wild.
It is something else. Last one, RXRX, because this is one that has beaten the living hell out of me. I've been following this one since IPO. I was buying this at 20. I bought some more at 10. I bought some at 560. Not looking good.
No, I mean, it's a speculative play, guys. It's a speculative play. It's years and years away from being anything substantial. But if healthcare AI is going to be a thing this year, if that's a thematic, like Tempest AI and Recursion is like two great plays for that. And you saw Tempest AI.
Just set your stop, $5.30.
Yeah.
If it goes to explore new lows, guys, just dump it. That's what I'm going to do. So if I'm going to keep buying here down to $5.50, set my stop and just be on with my life. If it's not going to find local lows, it ain't the time. It's going to trade down to $1 reverse split. Then they'll try to market themselves and maybe get somewhere. But I love the participation today. So we will definitely make a little more time for next week. I love how many comments we got and how active everyone was. We'll put some more time on the calendar for next week to do a little more smash and pass. Appreciate you guys being here. As always, make sure you go follow on Twitter at Stock Savvy Shy and the Big Quench. Go in there and follow us because that's where we're posting updates, access to new products, access to us, to content. That's where you're going to get it all. We'll see you guys here next week. Reshare this, tag some tickers. We love you. We'll pick some winners from those posts if you guys hit some shares and drop you guys some free stuff. So love you all. Stay blessed now. Bye-bye.